Thank you for joining today's webinar for our second edition on Bourbon investing inside of your self-directed IRA. It is top of the hour and I want to be respectful of everyone's time, so we're going to go ahead and get started. I'm Reneika Lightbourne. I'm really excited to welcome back Morgan Salsman of LQD Assets, where she'll share how tapping into the bourbon industry as a whole can help build your retirement wealth. I will also learn some industry fundamentals, like how the process works, market trends, some long-term outlook for the space, and then of course how she's worked with investors, self-directed IRA included. Thank you, Morgan, for being our featured speaker today.
Thank you for having me. Excited to be here.
You're certainly welcome. Before I turn it over, I do want to kind of give you a general overview of how self-directed IRA works and of course the process to get started with us here at Advanta. Also, if you have questions, go ahead and type them in the question box. We will allocate time at the very end to get those answered for you. Again, I'm Reneika Lightbourne. I'm part of the business development team. I've been with Advanta as an employee for a little over 6 years now, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I advocate both personally and professionally. After today's webinar, if you have any questions or you want to kind of do a one-on-one consultation, you're always welcome to give me a call or send me an email. And you can certainly go to our website at advantaira.com to schedule some time on my calendar. Just a little housekeeping before we get going. Please note that at Advanta, we don't give you any tax, legal, or investment advice. So all of the information we're going to go over today is just for educational purposes. As always, we encourage you to consult with your professional team, whether that's your financial advisor, your CPA, attorney, or a spouse before making any investment decisions. Just a little history about Advanta and who we are. So we've been in business for about 20 plus years now as one of the leading self-directed IRA administrators in the industry. And while we don't give you any tax, legal, or investment advice, our team is comprised of certified financial planners, obviously certified IRA service professionals, attorneys, and so forth. Our headquarters is located in Clearwater, Florida. Advanta does have an office in Atlanta, which is where I'm personally based, but we do work with clients nationwide who invest obviously throughout the country and internationally as well. We do have a little over 3.6 billion under administration now, so we're actively growing. One of the things that we take great pride in is providing our clients that concierge style service where you do have a dedicated account manager who's with you for the life of your account with us. So when you're ready to make your investment or you have questions regarding your account, you know exactly who to reach out to. And then of course, our educational content being second to none, where we have experts and practitioners such as Morgan come in and knowledge share with you. Like today, we host weekly webinars, typically Tuesdays and Thursdays. So I highly encourage you to continue to attend. If there's a topic that you're interested in, you're always welcome to reach out to us. In addition, we also have a virtual networking event, Pitch, Promote, Prosper, which is held typically on the last Friday of each month. So you're welcome to go to our website and register to attend that forum. We also have a podcast hosted by my colleague, Alex Perney. I highly encourage you to check that out if that's your style of learning. And then, of course, our blog content features anything and everything related to our industry as a whole. So exactly what is a self-directed IRA? Simply put, it just means that you get to decide exactly what works best for your IRA. You're going to have complete control over the retirement funds. You're going to have complete control over the investment decisions. It's near limitless in terms of what's on the table for you to invest in. That includes a real estate, whether it's a rental property or a fix and flip. You have the likes to invest in notes and mortgages, private equity. Obviously today with Morgan, we're focusing on bourbon investing inside of the IRA, but you have a long list of things that's at your disposal to invest in, which includes the likes of oil and gas, precious metals, and so forth. So why do people choose to self-direct? I'll just touch on a couple of them. You can self-direct for many different reasons. One, it could be a new source of capital for you. So instead of taking out a personal loan or tapping into your emergency fund, you have the option to use your old employer plans like 401ks and TSP type plans or IRAs to make your next investment. If you're an investment provider or you're looking to venture out and raise capital to do more deals or do your first deal, self-directed IRAs retirement account as a whole is a great resource for you to raise capital. Another reason as to why someone may choose to self-direct is the volatility in the stock market, the ups and downs. Whereas with self-directed IRAs, you have the option to diversify into something like Bourbon investing, which may not be privy to the ups and downs, the volatility like you would have in traditional markets. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, it's the ones that you're already familiar with. Meaning, if you were to go to the IRS website, you won't see the term self-directed. However, what you will see is traditional IRAs, Roth IRAs. You also have the option to self-direct an inherited IRA. Obviously, with an inherited IRA, there are rules to be mindful of. So again, if that situation applies to you where you inherit an account from a loved one, you can certainly reach out to us. We can kind of talk through what to be mindful of when it comes to inherited IRAs. If you are self-employed, so whether you have a small business or a side business, you can certainly look to self-direct a SEP, simple or solo 401ks. Solo 401ks, employer-sponsored plans have higher contribution limits. Specifically, solo 401ks, it does give you greater flexibility. So again, if you're eligible for it, we can certainly kind of talk through that. Some lesser account that's just as essential are HSAs. So as long as you have a high deductible medical plan, you can certainly look to self-direct that account. And then ESAs, educational savings account, where you can self-direct for your kids and grandkids' educational expenses. The main thing to be mindful of here when it comes to these types of accounts is if it's a current employer plan and you're not 59 and a half, most times they'll tell you, no, you can't move those funds. If it's an old employer plan, you can move it. There's no restrictions there. And then, of course, with the Roth account, as long as you've held that Roth account for 5 years and you're 59 and a half, then those distributions would be tax-free. When it comes to funding your IRA, there's several ways you can fund your account, whether that's transferring from an existing IRA. So let's just say you have an IRA at a Fidelity or Charles Schwab. You get to move as much or as little as you want to or need to. There's no tax liabilities. There's no tax reporting with that. It's simply Advanta office talking to the other custodian's office to move whatever amount you specify. If you have an old employer plan, whether that's a TSP, 401k, 403b, 457, or a pension type plan, again, it's a tax-free movement of money. In that scenario, you would actually have to initiate the request. The other custodian will report that X amount of dollars left to your account. Advanta, as the receiving custodian, will report that X amount of dollars was received. As long as it's the exact amount, then again, there's no tax liabilities. And then, of course, you have the option, as long as you've earned income, you can make an annual cash contribution. So for traditional and Roth accounts, if you're under the age of 50, you have the option to put in $7,000. If you're over the age of 50, you have the ability to put in $8,000. Again, for SEP, Simples, and Solo 401ks, those are your high dollar accounts, employer-sponsored plan. Specifically for a Solo 401k, you get to essentially contribute twice. You get to contribute as the employee, but also match as the employer. And depending on your age, between 60 and 63, with a Solo 401k, you can possibly put up to 81,000 plus into that account. So again, high dollar amount that you can save for retirement account. ESAs, 2,000 per year per child. With an HSA, as long as you have a high deductible plan, again, check with your plan provider. For individual accounts, you can put in 4,300. For family plans, you have the option to put in 8,550. But also with an HSA, if you're over the age of 55, you have an additional $1,000 that you can kind of contribute to that account. In terms of getting started with us, we've really streamlined that process for you in 3 simple steps. One, you can go directly to our website at advantaira.com, complete the IRA application. Typically, it will take you within 15 to 20 minutes. Certainly, if you need help with that, we can walk and guide you through that. Step 2 is funding the account. So whether that's a combination of making an annual cash contribution, as long as you've earned income, transferring from an existing IRA, or doing a direct rollover from an employer-sponsored plan. And then finally, step 3, what is it that you're interested in? Is it something Morgan's going to say in the call, or is it another alternative asset that you have an interest in? Essentially, with self-direction, again, you have the ability to invest in what you know and understand and what resonates with you. And with that, Morgan, I'll go ahead and turn it over to you to give your presentation.
Thank you very much. And as somebody who is a self-employed person right now, the value of the opportunity to invest in alternative assets through your IRAs is immense, and is something that makes me very excited. I'd love to kind of share a little bit about my background in the industry, and then kind of go into how I built my company and talk about kind of the opportunities that we have provided for our investors. So I grew up in Bardstown, Kentucky, which is bourbon country, as we call it. And so being around that at a very young age has been something that exposed me to the opportunity to understand the industry, as well as understand what it's like to invest in it. And when I was in college, I got the opportunity to invest in barrels myself. I was very intrigued by it, as it was almost a private equity-esque investment opportunity. As you know, a 21-year-old, you don't really get a lot of those. And as somebody who's been very curious in the finance world, I wanted to take advantage of it. So I started learning from the gentleman who had started our program, and we did it for several years. And by the time that we got the ball rolling, I think we realized how much work it really was to run a program like that. And we had the conversation of potentially closing up shop, and I raised my hand as one of the youngest members in the group, if not the youngest, and said, you know, I'd really like to continue to do this. What would it take for that to happen? And I presented our group with some of our lessons learned and made a few changes to the entity structure, and convinced 9 of those 12 to come over and start investing with me. And this was back in January of 2022. So we had started our original investment in 2019. And so a few years went by, and I proposed this, and they were very excited about it. And I became kind of the leader of the operation, and ended up, you know, growing from our original 9 to now 100 investors or investing entities. We've raised over $21 million for these barrel purchases. We currently have about 13,000 barrels in inventory, and we actually have gone out and built our own warehouses. So our warehouses are about 110,000 square feet and house about 70,000 barrels for us currently, with a capacity of 100,000 barrels, which is a lot of inventory. So, you know, over time, we have kind of grown our business based on the need from our partners. They kind of had interest in, you know, finding some opportunities to offload inventory, which is what encouraged us to go out and build our warehouses. The industry is growing at such a rapid rate that, you know, we were running out of space to put these barrels away. And my background is traditionally in civil engineering and project development. And so it was a great opportunity for me to be able to bridge the gap between my experience in the development space and my experience in the whiskey space, and my experience in, you know, the financial world as well. And to me, it was a no-brainer. I mean, this was a program that really hit home for me growing up in Kentucky. It was a great way for me to be able to stay connected to my heritage and be very tied in and proud of where I came from. And so being able to spend the time developing those warehouses to support this business was such a fun project for me. And so the third avenue of our business really is the consulting avenue. So we talked about a little bit about the investment program, getting it started, the warehouses that we've built, and now what do we do with these barrels? So we actually have a consulting arm where we actually build, curate, and develop whiskey brands. And so we use our barrels as support for these brands. So basically what they do is they come to us and say, hey, you know, we need to put some liquid in the bottle, and they will tell us the age they want, the mash bill they want, or they'll tell us we have no idea. And that's a really fun place to be. So we can sit there with them and taste through a bunch of products, find something that fits their mold, their audience, and their consumer, and build something for them. And so really the value for these brands is that we act as a financial partner without taking equity ownership in their business. We hold the financial responsibility of these barrels while they're aging for these brands, and then sell them to them to basically reduce the time frame from ROI, or from investment to ROI for them. So for us, we want to park our money in a place that's going to be consistent and appreciate in value over time. So we're going to buy these barrels at new fill age them for, we'll say, 5 to 6 years, sell them to this brand, and that's when the brand's investment starts. So the brand's time frame from their investment into their return on investment, which is when that product is getting pulled off the shelf, decreases significantly. A lot of brands in their young stages do not have the cash flow or the capital to be able to go out and purchase, hundreds of thousands of dollars worth of inventory and wait 5 years to put that in a bottle. Some of these brands need that now, and that's when they come to a partner like us. And so what does that really look like for the investor? So we have a variety of opportunities that we provide for our investors, and our traditional program is a $20,000 a year investment for 4 years. And so with that, you participate in buying one of several tranches of barrels in a year, and you basically get your prorated share of ownership, rounded to the nearest whole barrel, allocated to you. And so those barrels are then purchased, they are filled with whiskey, and then they are moved to our warehouses where they'll age for, our general range is 3 to 8 years, and that is the exit time frame is driven by the brands that we work with. So if they want to be putting a 6-year-old product in the bottle every day, that is the age we'll sell this product at. And it's considered, from Warren Buffett's standpoint, a lumpy investment, because you're not necessarily getting a dividend payment on an annualized basis on your investment. You're really only getting that return when those barrels are sold. So we will age these barrels for several years, sell them to a brand. The brand then takes that and puts it into a bottle. And so the investors get to see that appreciation in that aging process. It's similar to real estate in the fact that barrels continue to appreciate in value over time, and that time cycle ends as soon as you dump that barrel. So when you put the barrel into the bottle, that's when the aging process stops. So with that, we do have a lot of opportunities to work with small brands, growing brands, to be able to be that capital partner for them and really take advantage of that. And our estimated annual returns are in that roughly 20% annualized range, and that continues to appreciate in value over time as your barrels continue to age. So, from beginning to end, you're looking at an investment of 4 years worth of investment, $20,000 a year for 4 years. And we're expecting that exit will come, roughly 3 to 8 years post each investment tranche. And we anticipate that the investors will continue to be able to benefit from our partnerships that we have in the industry, from me growing up in Bardstown, the relationships that I've built over the last 6 years or so, the strong partners that we have, and even our warehousing clients. So we've really built an ecosystem here for the investors to really sit on comfortably. And our average annualized return over the last 6 years has been about 38%, which is phenomenal. But there has also been a small correction in the industry. And so because of that, we do anticipate those returns to be in that 20% annualized is what we have predicted over time. And so, as you know, the best time to buy is when prices are low. And so we are capitalizing on that opportunity right now by continuing to purchase throughout the next several years. And we've really been able to take that opportunity and run with it. And the connections that we have in this industry are very strong, and it's something that we're very proud to be able to provide to our investors and the partnership with our brands. It's very important for these brands to have access to capital to be able to continue their growth. And for the investors, it's a great place to park your money. It's an alternative asset that continues to appreciate in value over time. And when you're working with something like an IRA or a 401k, you're looking for those long-term investments. You're looking for somewhere to park your money and not worry about it, because you want to see the growth over time until you can pull that money out. And, a tangible appreciating asset is a great place to do that. We do compare, as I mentioned earlier, to real estate fairly frequently, because it is one of the few other asset classes that you have that continues to appreciate in value over time. And so I guess that may be a good time to pause for any questions that we have at this time. I know it's a lot of information to share.
Yes, thank you so much, Morgan. Great information. There is questions. So the first one is, do you know the brand at the time you're putting the whiskey into the barrel? That's the first question.
Great question. So we have 4 distilling partners that we work with. So you know where we're purchasing the juice from. We work with Bardstown Bourbon Company, Green River Distillery, and Whiskey House of Kentucky, and MGP. Those are the 4 sourcing partners that we have. And so they produce our mash bills per our request and put the whiskey into the barrel for us. Now, on the exit side of things, we do have some programs where we have planned exits. And so, of course, those are exciting because you have a plan of where those barrels are going to go. However, a lot of the industry operates on what's called a spot buy. And so that's where I mentioned earlier, they'll come to us and they'll say, hey, I need a 6-year-old product to put in the barrel right now. To put into the bottle right now. And so with those, you really can't plan for that. So we have a variety of exit opportunities to be able to diversify our returns, to be able to diversify our lots of barrels as well, to diversify the price points at which you're entering at and the price points at which you're exiting at.
Okay, next question is, do you have connection with all of the warehouses that are being built in Bardstown?
So there are a lot of warehouses being built. And in terms of warehouses, we have relationships with many of them. And because there is a little bit of a supply demand issue on the storage side, we're talking to them on a daily, weekly basis of, can we help you alleviate any of the stress that you're experiencing? There's actually a moratorium on building warehouses back in 2023 that, really slowed down some plans for some developers. And so it gave us a great opportunity to build relationships and continue to provide a service in a time of need for these distilleries as well. And we do have relationships with many of the distilleries in Bardstown and around Bardstown as well. It's bourbon capital of the world, so it's one of the densest collections of distilleries in the world. Okay,
next question is, can you explain how the pricing is determined for barrels?
Yes, it's on the purchase end of things, we negotiate our contracts years in advance. So as I mentioned, we have a 4-year commitment for our investors. And so the reason that we do that is because it mirrors our 4-year investment with the distilleries. So we approach the distilleries and we say, we would like to purchase X amount of barrels a year. And they will judge based on their current cost of goods, market conditions, all of those kinds of things, where we want to sit with that pricing. It's also based on the volume that we are purchasing. And so, we spend a lot of time at the negotiation table talking about what's the best opportunity for us, what's the best opportunity for them. And so those distilleries, help us make that decision on the purchase side of things. And we're constantly renegotiating and having those conversations to ensure that our investors are getting the best value for their money. On the sales side of things, it's very heavily determined by supply and demand. So if there is a large supply of a particular mash bill, the value of that barrel is probably going to be a little bit lower. But if it's something that's unique, or if it's something that's old, the longer you hold these barrels, the more value that they gain. So, it's very, very market driven on the back end, but we do have estimated returns that we expect. And that is where we kind of list our product on the market as well.
Okay, more questions. So the next question is, this is a 2-part. What is the waterfall payout structure? And can I invest as an accredited investor without a self-directed IRA?
Yes, you can invest as an accredited investor without a self-directed IRA. That is definitely an option, and it is not a waterfall structure on the back end. As I mentioned earlier, it's very much so considered a lumpy investment. So the barrels are sold when we have somebody come and buy them. We have to match a buyer and a seller together, basically. And so those opportunities are not structured on the exit side. We have estimated timeframes that we anticipate seeing those returns. And so that has been our strategy over time. We do have some brands that commit to buy from us on futures contracts, which are great, but not all of our barrels can be bought that way. Majority of the industry functions on spot buys, which is coming to you today and saying, I'm ready to put this product in the bottle now, and then we sell it to them, and that kind of dictates our timelines.
Okay, next question, which is also a two-part question. It says, what is the average anticipated time expected for the investment? And it says, oh, 4-year commitment is required. So they reiterated your 4-year commitment timeline.
Yes, so 4-year investment, so you're putting in money for the first 4 years. And then we have a 3 to 8 year anticipated hold time for those barrels on the back end. So if you invest in 2025, we would expect that the earliest chance for you to start seeing returns would be in 2028. And then you could also extend that through 2032, basically. So that's kind of the range that we are expecting. You know, when we built this program, we knew there would be roughly a 12-year investment from beginning to end in terms of investing all your funds and then starting to see those returns on the back end. So it's a long-term investment, a long-term hold, and it is something that I advise people to not look at as a get-rich-quick scheme and look at more as a diversification play to kind of hedge against other investment opportunities and other markets that you're working in. Because it does operate on completely uncorrelated indicators from the stock market, from real estate, from any other investment that you can consider. It's really based on, you know, consumer trends and, you know, economic vitality to really make those, you know, make those decisions and growth in the industry happen.
Okay, so next question is, what are the risks? So if you can talk about some of the risk when it comes to bourbon investing.
Yes. So the risk associated with it is, you know, consumption goes down. That's always a risk that we are aware of, and it's something that we have to consider. And in that case, you know, what are the results of that? The results of that are longer hold periods. So you're still going to continue to see the appreciation of these barrels over time, but you're going to have to hold them longer. So then your holding costs increase a little bit. So, you know, we incur costs on an annualized basis. And so in the case that we extend past our hold term, we do a capital call to be able to cover those expenses 1 year at a time, post the initial investment estimates.
Okay, next question is, if I invest, how do I determine which barrel is assigned to me?
So the way that we handle that is we have a lot of barrels, and say it's 2,000 barrels. We, in the past, would assign a specific barrel number to our investors, to each investor. And we moved away from that method because it really pigeonholes you into when you can participate in a barrel sale. So switching to the method of owning a percentage of the lot based on your prorated share of ownership has allowed us to provide the opportunity to diversify any losses. So for example, if a barrel collapses and, you know, there's no liquid in it and it bursts all over the floor, what do we do with that? If you own barrel number 001, you are liable for that barrel. And when you're buying 10, 20 barrels at a time, you know, that could make your investment no longer profitable. So we diversified into the opportunity to remove the assignment of the barrel number and just assign you to a lot, which allows us to diversify our dividends when we distribute those more evenly among investors, and it removes kind of the luck of the draw from when you get to participate in those dividends or those dispersions.
Okay, next question that came in is, how is insurance handled if there is a, a fire or spoilage or a theft or something?
That's a great question. So we have insurance on all of our barrels. We have insurance on all of our warehouses. And so that's part of the annual expenses that we pay on these barrels. We value them annually, and those price points are reevaluated as those barrels age. And so there's insurance coverage on the barrels in terms of loss. There's insurance coverage on the company as a whole. There's insurance coverage on the warehouses as a whole. And it's very similar to any insurance policy on assets that you would have or inventory that you would have. It protects you in the case of loss, in the case of, a natural disaster, or in the case of, a barrel being empty or a barrel being broken. So majority of things are covered under that insurance as well.
Okay, I have a couple more questions. You mentioned you have a warehouse in Kentucky. Are investors able to, I guess, tour or view the facility?
So we do allow for that to happen. It's a scheduled thing that we do. And every year we try to do a meetup for our investors as well. So we give you the opportunity to, last year we did it at our warehouses, and we did it at a distillery partner that we have. And then this year we're doing it actually at one of our brand homes. So one of our brands has a winery in Napa, and so they're doing a concert event out there in October. And so we invited all of our investors to participate in that as well. So it gives you the opportunity to visit the facilities, taste your barrels, and also just get to know the investors as well.
Okay, there's more questions. And again, if you have more questions, just go ahead and type those into the question box. Question is, how long does it take to get paid after a sale? So for the investor, like, how long does it take me to get paid?
So we distribute our dividends, almost immediately. Really, the time frame is once we get the barrel sold, once we get all of the accounts trued up, you'll get that payment. And so we do 1099s for our investors. We do not have K1s because there's not equity ownership in the business. It's really just ownership of the actual tangible asset, the barrel. So you'll get a 1099 every year that will tell you, what we dispersed, what you have earned yourself, and what funds have been returned to you. It will also include any interest earned over time, because we do keep your funds in an interest-bearing account to ensure that while it's being held to pay for storage and insurance, it's also still appreciating and growing, and we're making the best use of that as well.
Okay, next question is, what is the impact of the angel's share on the barrel investment valuation before going into the bottle?
That's a great question. So angel share is something that is a part of this industry, and for those who do not know, it's basically a percentage of the barrel that gets lost to evaporation every year. And it's something that is, we've been able to predict over time, just from experience with it, but it is not something that you can control. And so when we are working with your traditional aged barrels, so that 3 to 8 year range, typically you just move forward with the sale, and it's kind of a get what you get scenario for the brands. And there's an average, and you can guesstimate, and we're able to do those kind of calculations. But when you get into the older barrels in that 15, 20 year range, people are much more concerned about the price that they're paying for these barrels and what they are getting out of them. And so you can do like a weighing and a gauging process to be able to kind of calculate what is left in the barrel, which is, a great thing to have. But it also costs extra money. And so typically that falls on the buyers on the brand side to be able to pay for that and take on that responsibility if they want that before they make their purchase.
Okay, another question is, in addition to working with the distilleries and brokers, do you also work with private buyers as well?
Yes, so we do work with private buyers. We've actually built some private labeling opportunities. I mean, that's really our bread and butter. So it's almost a white labeling program is the way I would call it. And so we can do corporate gifting, we can do single barrel programs for a restaurant or a retailer, we can do single barrel programs for somebody looking to start a brand. There's a lot of opportunities in that space. If you want to put whiskey into the bottle, we can help you make that happen in any way you're interested.
Okay. Can you touch on, like this is talking about market trends, as how has the demand changed in the past 10 years, and where do you see it going in the next 10 years?
Demand has changed. It actually skyrocketed in the middle of COVID, and so that was a huge success for us, and you know, contributed to a lot of growth in the industry. We've seen a little bit of a correction post COVID, and it's been a healthy correction. So you know, expecting that we will continue on the trajectory of growth is fair. But we have seen a correction in the last couple years, really the last 18 months or so. And it's been healthy. It's been healthy for the industry. It's been able to allow more brands to get back on the shelf at a reasonable price point. They're able to put more exciting product in the bottle. It's been a healthy correction, but a needed one for sure.
Okay, and what are your outlook for, I guess, the next 10 years?
For the next 10 years, I think global demand for American whiskey is untapped. The more opportunities that our industry has begun to explore internationally, the more we've really unlocked new avenues for growth. And some of our partners are breaking into markets like India and like China, and those markets are really picking up the pace and consuming our product at rapid rates. American whiskey can only be produced here, and it's something that other countries don't have access to, and part of that is because of tariffs and things of that nature. But it is something that we produce proudly and is very, very well received across the world. We just got to figure out the best way to get it into their hands.
And you literally just touched on two of the next questions in terms of are exports growing internationally? So you just kind of touched on that. And then how is the tariff or trade policy affects bourbon sales overall?
Very, very good questions. And yes, we did touch on those. So tariffs, of course, are affecting it. Whiskey seems to always get caught in the crossfire when it comes to trade wars, which is so intriguing to me. Just growing up in Kentucky, it's always been very second nature to me. And I guess it is something that is maybe not necessarily quote unquote a necessity. So it can easily be bartered with. Definitely has slowed down a little bit on the export side, but we've seen even as of recently, Canada has gone back to zero tariff on whiskey and import export, and so has the UK. So, you know, and the EU. So that has really allowed us to kind of get the machine back up and running, and there are a lot of exports occurring. And like I mentioned, India and China are two markets that are being very heavily explored by many, many, many of our partners at this time, and it has been received very well.
Okay, next question. I know this is a question that came in. I know you mentioned, you know, a healthy correction, but the question is bourbon recession resistant?
It is recession resistant in the manner of when times are good, people drink, but when times are bad, people also drink. And so that's something you have to keep in mind here is many of the brands that you'll see on the shelf are going to be staying around during an economic recession. Of course, you can deal with maybe some spending habits changed, and so they may be going for the $30 bottle instead of the $50 bottle, but we do still see strong resurgence because it is an uncorrelated asset to your traditional markets. And you can also kind of hold through those recessions as well. So if there is a little bit of a wavering price point, you know, you really do get that opportunity to recover because it's going to continue to appreciate in value the longer you hold.
Okay. Our question is, can I sell before the barrels are fully matured or before the 4-year timeline?
So we sell all of our barrels. We do not give the investors the individual decision on when they get to sell their barrels. It's all based on prorated share of ownership to maintain fairness across the investors. So if we have a buyer for it, absolutely, but we cannot promise an exit without going through our structured system based on your prorated share of ownership.
Okay. Next question is, will there be new distilleries opening up for more investment opportunities?
There are many distilleries opening on a daily, weekly basis in Tennessee, Kentucky, etc. And definitely there is opportunity for growth in this space, and we will definitely capitalize on that.
Okay. Question is, what are your thoughts on could AI or what technology are you using to improve your bourbon investing or yield forecasting for your investors?
AI is a great tool. I think it has a long way to go in terms of, viability in this industry. But there's a lot of companies out there exploring it. We worked with a partner to explore how to collect data points on our barrels in our warehouses. And I think that is a great tool to be able to share more information with the consumer. The consumer loves to be educated on what they're consuming, and they just like to know things. We're in a world where knowledge is power and everything is easily accessible. And so the more information we can share with our consumers, the better.
Okay, next question is, how many barrels can I invest in?
You can invest in as many as you want. We buy about 4,000 barrels a year right now. And so, if you want to fit into that mold, that's great. If you want to do more than that, we can make it happen. It's really, what is your limitation of capital outlay that will make that decision for us.
Okay, and I think we're getting, I think that's another question just popped in. Just bear with me. It says, where is your barrel inventory physically located compared to your investment operations?
So I currently live in Nashville, Tennessee, and our warehouses are in Springfield, Kentucky. It's about a 2.5-hour drive, and I'm up there at least once a month.
Okay, and I think you mentioned this earlier, but the question is, what distilleries do you partner with?
Yes, so we work with Whiskey House of Kentucky, Bardstown Bourbon Company, Green River, and MGP.
Okay. Morgan, I think that covers all of the question. If you have any additional question, we still have time if needed. Feel free to put those in the question box. I did add your contact information to my slide, but you're welcome to kind of give whatever contact information you want to share with the audience, just in case if they do have questions, they can reach out directly to yourself or your team. Great,
yes. And the only correction I have is it's lqdassets.co, not .com. So
yes, I did change that.
Great. But aside from that, feel free to reach out to me. I'm very active on LinkedIn. If that's of interest to you, feel free to follow along there and see what we've got going on. Reach out there via text, phone call, the website, and you can find my email on my LinkedIn page as well.
Wonderful. Thank you so much, Morgan. I appreciate you coming in again to knowledge share. I know we had some technical issues with the webcam, but I appreciate you just working through it. Audience, I enjoyed your questions, your time. Thank you again for tuning in. And I want to say, if you have questions about self-directed IRAs, again, feel free to reach out to myself or my colleagues. Go to advantaira.com and we'll be happy to help you. With that, happy investing. Have a great rest of your day and week. Thank you, Morgan.
Of course. Thank you very much.